true, actually. So let's get started then and try and answer some of the queries sent in by our guests. So our two experts are here. Nuresh Mirani of Analyze India will help us with our stock queries this afternoon, and we have Feroze Azeez of Anand Rathi Financial Services who will be with us in a bit, who will answer some of the personal finance queries. So let's get started with our first caller. It's Sudarshan, who calls in from Andhra. Hi, Sudarshan.
Hi.
Hi, what's your query?
My query whether to Adani Enterprise can be retained or better to come out because of the latest decision taken by the company.
Okay, and you have 300 shares which you've bought at the rate of 500, is that correct?
Yeah.
Oh dear. Okay, so you're making quite a big loss actually. We don't have a fundamental expert on our panel today, but Nuresh, who's a technical expert, will try and help you with this. Nuresh, for someone who's making such a big loss on Adani, I mean, what are the charts telling you about Adani, and what's the way out for a retail investor?
Like if we look at Adani, there was a demerger, so it's not actually a loss. He would be receiving shares of Adani Ports, Adani Power, and Adani Transmission. So on an adjusted basis, there is not down 5-10% also from yesterday. So what we see is he can continue to hold on and continue to hold on Adani Ports, which looks good on the charts. So once he receives the shares, I would say overall hold on to the stock.
Okay, well, that's the call coming on Adani Enterprise at this point. Remember that there is that demerger which has taken place and is already effective yesterday. But let's get in another query. We have Girish, who calls in from Gwalior, and he has investments in Eicher Motors. Girish, go ahead. Go ahead.
Mobile ko charge mein laga do.
Acha. Okay, I think we can just read out his query at this point in time. He has a buy price of 15,990 rupees, quantity 25, and he's sitting on a little bit of a profit at this point in time, not as much as what Volvo generated. But Naresh, what's your sense in terms of Eicher Motors?
So if we look at it, technically the stock has been in a long-term uptrend for quite a long time. But given that the over-participation has come into the stock with 2 blocks in the last few months, I would suggest the investor to get out of the stock, exit it, and maybe buy it on declines again. Because what we see is going ahead, unless the investor has a view of 2 to 5 years, majority of the gains are already done. So I would say exit at current levels and look back towards, say, if it goes down by 20-30% towards 12,000 levels.
All right. Up next, Mittal has written to us from Pune. He has a query. He says he's 25 years old. He's a professional. He wants to invest 5,000 to 6,000 rupees in mutual funds and is looking to have a diverse portfolio. So his question, Feroze, is what are the funds, whether it's a debt fund or an equity-based mutual fund, that he could look at?
Yes, so one very important word which is used in his, when he has written to us is diversify. See, mutual funds' biggest advantage is to diversify. He's done one good thing of starting early at the age of 25, and then he's looking for a diverse portfolio, and a right mix of debt and equity creates a diversified portfolio. So 70% of his money, Mittal's money, should be in equity and about 30-odd% in debt. So 3 funds, 2 in equity, 1 in debt should do the job for him in the form of a diversified portfolio. 2 equity funds would be Birla Frontline Equity Fund. And on the mid-cap space, he can look at Franklin Prima Fund and invest 2,000 rupees in these 2, which is almost about 2/3 of the money in equity. On the debt side, he can look at a HDFC Corporate Bond Fund, which will be another 2,000 rupees. That's how you can start, Mr. Mittal, investing your six grand and have a very good diversified portfolio.
Okay, well, thanks Feroze for that. So that's our personal finance question answered there. But let's move on to a CNBC TV for the old tenure. But let's get back in terms of our markets. We have Abhijit, who writes to us from Baroda, and he has 150 shares of Tata Steel at 480 rupees. He wants to know whether he should hold or exit the stock. Naresh, what would you advise him to do? He's sitting on quite a bit of losses.
So if we look at the chart of Tata Steel for the last few years, it has been in a downtrend. But on a longer term basis, I can see some bit of support at 280 to 300 levels. So that would be a little bit of hope out there. So I would suggest to keep a stop loss at 280 and continue to hold on. And on the upside, 340 to 370 levels would be tough to cross. So till the time we don't cross above those levels, we cannot say a trend change has taken place. So hold on with a stop loss at 280, look to exit out the position at 340, 370.
All right, that's the word coming in on Tata Steel. There's some more news flow coming through for the Bihar Assembly elections. It looks like that the tie-up is now firmly in place. RJD, JDU as well as Congress. Already people were saying that perhaps this is inevitable, and now a confirmation of the same. There's some more, stocks which are under a bit of pressure. So you might want to pull up something like a Hexaware or Mastech even. So something from the IT space. You're seeing sudden accelerated falls over there. So these two stocks themselves have lost, something like Mastech has lost about 1.5% in the last few minutes. Even Hexaware about the same. And ABG Shipyard, although the stock still continues to trade in the green, but in the last few minutes it has lost about 4% odd. So you've seen that stock coming off that spike. But our next caller is with us already. Pankaj has called in from Ketal in Haryana. Hi.
Hi, ma'am.
Hi. How can we help you?
Ma'am, last 2 years, I have invested in 3 mutual funds.
Okay.
1,000 Reliance Equity Opportunity Fund, 1,000 in ICI Focused Blue Chip Fund.
Okay.
1,000 invest ICI Reliance Equity Opportunity Fund.
हाँ वो तो हो गया. Then ICICI Focused Blue Chip.
ICI.
Okay, never mind.
HDFC 200 fund.
Okay, HDFC Top 200. All right. And now, what are you looking for?
I have 2,000 more investment per month.
Okay.
So I have choose a select mid cap, Sundaram select mid cap, and 1,000 and I am invested Reliance Equity Opportunity Fund.
Okay. All right. Fine. Feroze already has investments in 3 funds. I think all 3 of them have been performing fairly decently. He wants to put another 2,000 rupees in. So should it be one of these, or should it be the fund which he has outlined, which is, I think, the Sundaram Select Mid Cap Fund?
So I think he predominantly has large cap funds in his portfolio, except the Reliance Equity Opportunities, which is a diversified portfolio. I think Sundaram Select Mid Cap has done well, but I would still prefer him, Pankaj. I think you should add on to 2 of your schemes, 1,000 rupees each, rather than adding a 4th scheme, because if you cumulatively are going to invest 5,000 rupees, 3 schemes will do the job for you. So don't add another 4th scheme. Sundaram Select Mid Cap, of course, has done reasonably well over the last couple of years. That's predominantly on the back of a good performance from the mid cap stocks over the last year and a half. But I think Reliance Equity Opportunities topping up 1,000 rupees and topping up another 1,000 rupees in ICICI Focus Blue Chip. I think these 2 funds, if added by 1,000 rupees each, would be a better strategy than adding the 4th fund, because all the 3 funds which you've chosen are good and require no mending at all, and you can continue confidently investing in them for the next couple of years at least. So I think just add on 1,000 rupees each rather than adding another 4th fund. Irrespective of a lucrative performance from Sundaram Select Mid Cap, I would still insist that you get into these 2.
Okay, well, that's the word coming in. Time for a break now, but we'll focus on some more stocks and answer some more personal finance queries in just a bit.
CNBC TV18, celebrating 15 years of leadership.
Hi, welcome back. You're with your stocks. We have a few callers with us on the line. So first up, it's Gaurav, who has called in from Kolhapur, and he wants to talk about Suzlon. Hi, Gaurav.
Hi, hi, ma'am.
Hi.
Yes, I have bought Suzlon for 29.5.
Okay.
500 shares. Just the past 2 months or 1.5 back. So it's trading on low time. I think it's about 20 now. So what should I do for that?
Okay, and are you in need of funds right now, or if you're asked to hold on, I mean, would that be possible for you?
Yes, it's no matter for me to hold on it.
Okay.
Also, I have bought Bank of Baroda.
Okay.
500 at 165.
Okay, fine. Bank of Baroda at 165, you said?
Yes, yes.
Okay. All right. Nuresh, he has two stocks, Suzlon as well as Bank of Baroda. Now, in the last few days, that we've seen a lot of these highly leveraged companies getting punished, Suzlon being amongst them. But, you know, they have a nice, powerful person backing them. Today itself, they've announced some new order wins. Would it be advisable for a retail investor to remain invested, and for how long? And secondly, he's bought Bank of Baroda at 165. So what would be your take on that?
So if we look at Suzlon, the last breakout came around 16 to 18 levels. So now the stock has already corrected from 30s to 2021. So I would consider a hold at current levels, or even look at a speculative addition at 18 with a medium to longer term view, and bet on the new people, those who have come into the company. Secondly, on Bank of Baroda, I believe it's a long-term bottoming out process on technicals, where we look at 140 to 160 as a consolidation zone, which was a price for the last few years as a support zone. So if the investor has patience and can hold on for 1 to 2 years, Bank of Baroda is also a hold at current levels, and add around 140, 145.
Okay, well, let's get to a personal finance query now. We have Hemant, who writes to us from Nagpur, and he wants to buy a term plan for his family. He says that he already has invested in LIC life cover term plan with a total sum assured of 10 lakh rupees, and he wants to know about other term plans. Feroze?
Yes, I think term plan, the most important thing when you buy a term plan is just the premium, because you're not expecting anything out of it in terms of returns. So if you ask me which is the best term plan in terms of competitiveness, because it's a commoditized product, I would say HDFC Click to Protect is going to be the most inexpensive, with coupled with the best settlement ratios, which is the most important criteria for a term plan. If the claimant actually comes for a claim, he should not be denied it. So that's close to about 95 to 97% in case of HDFC life insurance. So I think HDFC Click to Protect is the most competitive.
All right. Up next, Viresh has called in from Karnataka. Hi, Viresh. What's your question?
Hello.
Hi.
My query is about ITC.
Okay.